Hi, good morning everyone. Today it is another opportunity for you to enjoy while learning. By the way, this is Kent Ian Silverio, the third reporter for the Lesson 8, which is all about the financial literacy. So here I have the lesson outline or the covered topics that I'm going to discuss to you this morning. So we have here the 10 tips to avoid common financial scams among students, insurance and its types, benefits of life insurance, and lastly, the advantages and the disadvantages of each types of insurance. But before we proceed with our lesson this morning, let me present to you first the learning objectives for this topic or lesson. At the end of this lesson, you as a student are expected to identify the 10 tips to avoid common financial scams, define the insurance, enumerate the types of insurance, and lastly, to analyze the advantages and the disadvantages of each types of insurance. So now I am going to discuss to you first the 10 tips to avoid common financial scams that we might experience in future. So we better pay attention on these tips. And as our technology get improved, the fraudsters are rampant as well because they can easily do their work through the modernization or because of the modernization. So the first tip here is to never wire a money to a stranger. Wiring a money to a stranger is the most common scams. It is a method of transferring or transmitting money through electronically between the sender and the receiver with no physical money is exchanged. That is why we should not wire a money to a stranger because it might be a scam. This kind of scammers pressure you to wire a money to them because it is easy for them to take your money and they can easily to disappear as well. An example for this kind of scam is those who texted us that we won 500k from Wawawin, which is not true. If you call them back, they said that you send the money first before getting the prize. So here, there is no physical exchange of money happen. And that is the example for this. And you shouldn't wire money to a stranger no matter reason they give. Next, tip number 2. Don't give out financial information. Of course, you should not give financial information to others because it is personal. More than that, if you give your financial information, it's just letting everyone go into your way or you are open to them. Also, let them manage your account. So it is important for you to keep your financial and even personal information privately. Tip number 3 here is to never click on hyperlinks in email and even in Messenger. And it is really rampant today. Even I have experienced this that someone sent me a link but I refused to open it. This is somehow called phishing, where it is an email attack attempting to trick you into either opening an attachment that contains a virus or just by clicking a web link that contains a virus and or visiting a website which asks for your personal information. So there are many ways on how a scammer attack you. So we really need to be careful with it, and as a general rule of thumb, don't click links. Next tip here, or tip number 4, use difficult password. So why do we need this tip, or why do we need to use difficult password? So we really need to use a difficult password as it is the key to unlock our account. Using some simple password or weak password are more vulnerable to scammers or hackers. So if that hacker cracks or know your password, then they have an access to your account, just like your social media account and any other confidential account like bank account. That's why we really need to use a strong and difficult password that is distinct and uses numbers, small caps, and large caps, and even you can use symbols on it. Next, we have tip number 5. Never give social security number. It is somehow a common practice to share social security number in a certain situation, like if someone asks it. But that's our common mistake. We should not give our number just because someone asks us to do so. Because if our social security number falls into the wrong hands, someone could use this to open or get information to us. They can use this also to open credit accounts in our name and steal our identity. Tip number 6. Install antivirus and spyware protection. I know you have an idea about the function of antivirus is. This software, the antivirus, is designed to detect and prevent malicious software in our computer, including the viruses that is possibly made by the hackers. That is why installing this can be a great help for our security. So that you need to install antivirus and other spyware protection. Next, tip number 7. Don't shop with unfamiliar online retailers. Every time we make purchases over the internet, we are potentially opening doors to viruses, scams, stolen account, credential, stolen financial information, and even stole our identity. So, we make sure that we chose the right online shop to go through before checking it out. Tip number 8. Don't download software from pop-up windows. By clicking on a malicious pop-up in some cases can trigger a malware download. This can result in data theft, ransomware attack, and browser hijacking. It can be hard to close such pop-up or locate its exit icon, increasing our chances to accidentally click on it. But no matter what happened, we should not be clicking the pop-up windows. Next tip number 9. Make sure the website we visit are safe. It is really important to know that the site we visit are safe, because if we visit the site that aren't safe, there's a big chances and possibilities to acquire viruses. But what are the ways to make sure that the site we visit are safe? So first thing we should do is to check the SSL certificate. Means that the URL of a site should begin with HTTPS instead of HTTP only, because the S at the end stands for secure. Next is to analyze if the site has a modern theme. Next is to use security tools to evaluate the site. Then check the URL as I have said a while ago. Next, be wary of security seals. Then find out who owns the site. And lastly, escape spam. So those are the ways we should consider to check whether the site we visit are safe. Last tip here is to donate to known charities only. There's nothing wrong donating to a charity because it is a selfless act. But we should consider also if the charity we chose to help are reliable, that the in-kinds and money we give is directly goes into someone that needs it. Because there's an instances that the charity we help is a scam, that the money we give does not goes to people. That's why we should be careful choosing a charity that we should be helping with. So those are the 10 tips to avoid common financial scams. So please bear with those tips. And now we will be going to discuss the financial scams among students. Students are also vulnerable to different financial scams and fraud. In this discussion, we will be going to learn how to manage finances and being aware of financial scams that a student should master. And these are the common financial scams that a student should watch out for. Next scam that a student should watch out for is called the diploma mills. So when we say diploma mills, it is an institution that grants large numbers of educational degrees based on inferior education and assessment of the recipients. The most common of the diploma mill scams are the online universities, which offer a degrees that is not recognized. So when a student chose a university or an institution, they should make sure that that institution or university are accredited and legitimate. Next here is called the online book scams. We know that we can buy books on online. And scammers can use this opportunity to get students' credit card information. And so, if the scammers have all the information, then they can get easy access to it and use this for their own good. That is why when buying online, we make sure that the store is credible and reliable. Last here is the credit card scam. Most of the time, students use their credit card to any other transaction to fill out card and so on. And so, scammers can grab this opportunity to steal one's identity through the information they can get with the credit card. And they can have the access with the credit card also. So, if this happen, you can contact your banking institution immediately and let them check what happened with your account. And that's it for the financial scams among the students. Next, let us discuss insurance. Insurance is a way to manage your risk. It's like having a contract from a policyholder and with a company. So insurance, it is an important financial tool. It would help us to have protection against inevitable event. It can help us also to live life with fewer worries, knowing that we receive financial assistance after the incident or disaster, helping us to recover faster. There are also types of insurance that you can choose to apply. Some of them are health insurance, motor, and a lot more. Next, another and the most basically form of insurance is life insurance. I know that you have an idea with this. This is sometimes called death benefits. And this can help replace your income if you pass away or the placeholder. This means your beneficiaries could use the money to help cover essential expenses such as paying for expenses in death or tuition for the children. It can also use to pay off debt such as credit card bills or for the loan. Depending on the type of insurance you may have, this can be anything from retirement to major injuries to critical illness or even death. So these are some of the common risk categories. First is preferred class. It means that the policyholder is in excellent health, with normal weight, no history of smoking, without chronic illness, or family history of any life-threatening disease. This is sometimes called preferred elite, super preferred, or preferred select. This classification you can get and comes with lowest premium. Next, we have preferred. The policyholder is in excellent health but may have some minor issues, but it can be under control. Outside of a few minor factors like high cholesterol or high blood pressure, you won't get preferred plus rate, but your premium will still be very competitive if you belong to this category. Next category is the standard plus. The policyholder is in very good health, but some factors impede a better rating. And a few outliers to keep an eye for this is height to weight ratio and doesn't fall into the insurer's range for preferred classification. Your family history is good, so you shouldn't have any surprise in your future. Next one is called the standard. The policyholder may have family history of life-threatening disease or few minor health issues. So you have less ideal height to weight ratio and average life expectancy on your medical history. But you will see higher life insurance premiums in this class, but you're still able to get insured. Next one, we have the substandard. This means that the policyholder have a serious health issues. So an individual is considered to be riskier or prone to some illnesses. Thus, the life expectancy is low. Lastly, we have the smokers. As the name suggested, this category can have health problem issues relating to the respiratory or because of smoking and leads them to a shorter lifespan than the non-smokers and making them more of an insurance risk. That is why the policyholder in this class or category are guaranteed to pay more and higher premium. These are the benefits of life insurance. First, it pays for the medical and funeral cost. Second, it is for financial support. Next, for funding various financial goals. Next, it acts as a retirement secured conform. Lastly, it covers costs incurred from taxes and debt. Now, I am going to discuss to you the types of insurance, and there are 4 types of insurance: the endowment, term, whole life, and the variable universal life insurance. And we will going to talk about it one by one. First, we have here the endowment insurance. An endowment policy is essential a life insurance policy which, apart from covering the life of the insured, which is the main goal of the insurance, it helps the policyholder to save regularly over a specific period of time so that person is able to get a lump sum amount on the policy maturity in case the policyholder survives the policy term. This means that you can get the money you pay even you aren't died as long as you survive the specific time. An endowment plan is a long-term savings and investment plan with life insurance. You pay a premium for an agreed period and receive a lump sum at the end of that time. This maturity amount can be used to meet various financial needs such as funding one's retirement, children's education, even marriage, or buying a house. Next is the term insurance. Term insurance is the simplest and purest form of the life insurance. It means that it only focuses on protection life insurance policy. It provides financial protection to your family at the most affordable and provide coverage for a defined period in exchange for a specific premium amount. With term insurance, you can get a large amount of life cover at a relatively low premium rate. Next, we have here the whole life insurance. As the name suggested, it is a type of insurance that is permanent and the most common types of insurance that a people purchase, which means that the insured person is covered for the duration of their life as long as premiums are paid on time. This insurance is also called the traditional insurance. A whole life policy can serve as a source of emergency funds for you if something goes wrong, or you may be able to take out a loan against the policy. That's because a portion of each premium payment you make is funneled into a saving component of the policy called the cash value. The last type of insurance here is called the variable universal life. It is a type of permanent life insurance policy, and its features include cash value, investment variety, flexible premium, and a flexible death benefit. Like most payment policies, variable universal life insurance offers lifelong protection. It is designed to stay in a place as long as you live, as long as sufficient premium are paid. With variable universal life policy, you can choose from a number of investment options for your policy sub-accounts and your earnings based on the performance of your investment option. So that's it for the types of insurance. And now I am going to discuss to you what are the advantages and the disadvantages of each types of insurance. And this will serve as your reference of what type of insurance you are going to purchase or apply later on. So here we have the advantages of endowment insurance. Individuals must purchase a life insurance policy in order to protect their loved ones' financial future. In the event of your death, your family will be protected by a life insurance policy. An endowment policy is a hybrid investment and insurance product. You will get the sum assured at the policy's maturity date, and your beneficiaries will receive a death benefit if you die before the policy maturity date. If you are seeking a combination of life insurance and investing, this is one of the greatest options. Next, we have the advantages of term insurance. This kind of insurance is the most simplest type of insurance, and that's why it is easy to understand. Unlike any other insurance, term insurance is affordable because term policies offer coverage for a predetermined time. Also, it is more flexible because you have many options when choosing how long your term life insurance should last. And it is a great choice for young families looking for temporary coverage. Next, we have the advantages of whole life insurance. This whole life insurance never expires. As long as you pay your premiums, your death benefit will never expire. Some types of insurance policy may require you or allow you to adjust your premiums over time. But the premiums that you pay for your whole life insurance policy are guaranteed to remain fixed and consistent for as long as you have your policy. Your premium also contributes to your cash value. Whole life policy can earn. It means that while you can take dividend as cash or use them to pay portion or all of your premium, many people reinvest them in their policy. That can allow your death benefit and cash value to accumulate even more quickly. For the advantages of the last type of insurance, which is the variable universal life. This kind of insurance is a dual purpose. It can be a life insurance, which of course the main goal of this insurance. Then it can be an investment tool also, which can help you to achieve your financial goals. The potential to earn higher than average returns compared to other types of permanent life insurance. Moreover, this kind of insurance is a permanent insurance as well, means that there is no maturity. Also, it has flexible premium payment option. Okay, since we already discussed the advantages of each type of insurance, now let me discuss to you the disadvantages of each types of insurance. So we have here the disadvantages of endowment. The policyholder must forego some spending levels in order to pay insurance contracts. In addition, life insurance is frequently purchased for the benefit of the others, with the assured person serving as a supplementary beneficiary. Next, we have the disadvantages of term insurance. While term insurance is often the cheapest form of life insurance, there are some negatives to buying coverage. The policy doesn't build cash value, has no surrender amount if you cancel it. If you have to renew, your premium is adjusted based on your current age and health, which can mean much higher rates. Next is the disadvantages of whole life. This policy covers you for your entire lifespan. Given you pay premium on time, they typically have higher premium associated with them. Also, the structure of this type of insurance is complex. That is why it is hard to understand by the people. Lastly, we have the disadvantages of the variable universal life insurance. So this kind of insurance involves investment risks, just like mutual funds do. If the investment options you selected for your policy perform poorly, you could lose money, including your initial investment. Although, you can earn more in a VUL or the variable universal life insurance, but you can also lose more. Moreover, all cash value policies have fees built into the premium, and VUL is no exception. And I think that concludes my discussion for this morning. I hope that you learned a lot. Thank you for your time to listen. Bye!